private sale projects, early stage projects that launch. How do you play them? This is in my opinion, the de facto playbook. Well, all these projects, the main thing I would look at is their circulating token supply when they launch, because that would tell you whether it's going to be a VC Tokenomics play or not. What does that mean? Perfect example is Aptos, right? Because Aptos was also a new L1 they launched. So let's say all these new projects, private sale projects, early stage projects that launch, how do you play them? This is in my opinion, the de facto playbook. You look at their launch, whether Tokenomics, CoinGecko, CoinMarketCap, wherever they're on, you look at the circulating supply. You take this number and you divide by total supply. It gives you 16%. So 16% of the tokens are in the market, circulating. Now, to me, that tells me this is a low float project, meaning that there are very few tokens out there available. So it's easier to pump the price. So it's a VC Tokenomics project. So I would not be looking to accumulate this project right now for the long term, just purely based on this. Because if you just do 1 minus 16, you have 83% of the tokens off the market that eventually have to hit the market, which is going to affect the price. That's a lot of sell pressure, right? So if we actually take that and divide by 0.16, we said, so you have 5x the number of tokens off the market that will dump on the market. It's not to say that it can't do well, but probability-wise, it will not do well. What matters as well, this is where you do further research into the actual tokenomics and the vesting schedule. But let's say all these tokens will dump, right? The 5x of the supply will dump in 1 year. What that tells you is that in 1 year, the current price or the current valuation is going to change by 5 times, right? But that means you're having inflation. So the actual price has, if I'm correct, the actual price has to do a 5x just to stay at the current price. So if it does a 25x, if you factor in the inflation schedule, you divide by 5, so basically you're only doing a 5x return on your money. So that's what matters, right? Factoring in the amount of tokens that are going to hit the market. This is a data point we're hoping to add to the platform on the ratings page in the future. It basically tells you the percentage of tokens that are liquid, and then also the inflation schedule. But that's kind of how I would view it, right? So going back to Aptos, let's say this is where you have to kind of, if you want to get more advanced for long term, you could say, okay, I know they have 5x the tokens that are going to hit the market, but it won't happen till over 100 years, right? Kind of like Bitcoin, right? Let's say it's like 2150. Okay, maybe that's different, right? That can give you some leeway. But for most people, I just kind of blankly tell them it's a VC pump and dump. Not necessarily bad. It just means the price is going to go down. In terms of probability, the price will go down as more tokens hit the market. And if it does a 25x in price, you're actually doing a 5x, right? Just based on the FTV and everything. So what I prefer is to find projects that have a very high float, where you have lots of tokens already in the market, and you have very little inflation, and they have a very low FTV. In those projects, you know that a price is a price. It won't really be impacted much by new tokens hitting the market, and the FTV is good, right? So if anything, projects like this, if you really want them, I would just trade them. In reality, basically VC pump and dumps, right? Based on the VC Tokenomics, I would just trade them. So I would just look at the trader grade and use that to trade it, right? So for instance, this turned bullish January 9th at $5.02, currently at 13. So I would just trade it. I wouldn't fall in love with it long term until these tokenomics get better. But actually, the irony, Team Investor Grid is actually going up on this. Sometimes you kind of have, that's kind of like my opinion. Then you have the platform, which sometimes has a different opinion. So looking at this, technology-wise, okay, so the tech is solid. That's why he likes it. Fundamentals are solid. The valuation is, the issue here. It is a high valuation. But I mean, maybe it's not so bad. Maybe if you want to lean more towards the platform, this is just kind of more my preference, right? But sometimes even I go a different route, right? So this is right now currently at about the same FDV as Solana. So maybe in theory, maybe that's better, right? But I think the main thing is it has to do very, very well to keep up with the rate of tokens hitting the market.
Thank you for watching that video. But wait, we have more alpha for you. Click down here to watch the next video and get even more alpha.